Good morning, Sense of Things. This is Jeff and Ron for another weekly update of what's going on during earnings season and all the economic things coming out. We'll have lots to talk about today. It is, like I said, the middle of earnings season, and we had some big earnings yesterday. So a lot to talk about. Ron, how you doing, bud?
Good. I don't know about you, but I'm sniffing spring.
I am sniffing spring myself, and in fact, so did the big rodent
Uh-oh.
in Puxatawny. We have early
Yeah, Groundhog
spring.
Day.
83% of the time he sees his shadow, and we have 6 more weeks of winter.
Oh, I thought it was reversed. I thought it was a 40-60 that he
Nope.
predicts okay.
Heard it this morning, 83%. Actually, no, they explained it this morning. He is 100% right always. It's just they have difficulty with the conversation with him sometimes. There's misunderstandings in the conversation. So
He's not speaking loud enough. I understand.
That's why he's off, or they're off doing it like 70% of the time. But 83% of the time he sees his shadow, and that's 6 more weeks of winter. Today it was all sunny and nice, and which I never understood, because I'm like, okay, if there's sun, he's going to see his shadow. If there's not sun and it's gross outside, then he wouldn't see his shadow. And
maybe he's got special vision.
I guess whatever. But the big rodent saw it, and I was actually watching it this morning at 6:30 my time, 7:30 on the East Coast, and we have early spring coming. Now we still have 6 more weeks of winter. We're still going to be in early spring here, so we're heading for some warm weather.
Loving it.
Got a hell of a year starting off here already in the markets. Just
It ain't dull.
Yeah, super funny. One of the things that I kept hearing about, and I have to rail a little bit, you get some of these guys that get on the news, and they're just spouting off complete useless crap most of the time. But I heard something this week that made me go, and that is the January effect. And what the January effect is, if we start the year off good, that means that we're going to have a good rest of the year at this point.
Maybe what we'll do in one of our next podcasts, they also have the Super Bowl effect. Remember, if the NFC won, it would be an up year, but that in the last 10 years, it hasn't held up.
It's not worked at all. Yeah, it's just basically like the whole sell in May, go away.
Yeah, too many Patriot and Chiefs Super Bowls to debunk that.
That's exactly right. Yeah, so they're just going to destroy that. I wanted to set the level, set the ground here as far as the market. So year to date, S&P 500, we're up for year to date, we're up 3.44, 3.81 now percent, because it's apparently the market just updated. The Dow, year to date, we are up 2.13%. The NASDAQ, we're up 4.03, and a big day today because of some earnings from some big boys.
Meta, yeah.
The Russell, he's down, and we've been down for the last, I think, 6 years to the S&P 500.
Yeah, it's been flat.
Interesting, though, that the NASDAQ,
although this is the equal weighted index,
the S&P 500 equal weight is just now positive. Actually, it's now negative year to date, but it's just not really followed. If you argue the point that the January effect of the S&P 500, which S&P 500 are we talking about? Are we talking about the one that has all the high techs in the lead, or the equal weight one? Because if you're going to use that argument, I would venture to say that the market's going to be, or the market throughout this year would be from that perspective.
Yeah. A lot of layoffs in January too. That's been going up.
So I caught this. It was funny. It was, this came out of Investopedia. Can you make money exploiting the January effect? Unlikely. Even if it were real, which it's probably not, the markets were to rise uncharacteristically each January. The fact that people may try to exploit this would undermine its appearance. It's basically BS. I looked at 10 different studies that have been done, and there's absolutely no correlation to what the market has done at the beginning of the year to what it does for the rest of the year. What's
And
your
when we
take
hit
on that?
May, we'll have to do an analysis on sell in May and go away, which doesn't work either.
Yeah, it never works either. Yeah, or it does work sometimes, sometimes it doesn't, but is not a predictor. And once again, it's be in the market, adjust to it. Certainly you don't want to be full bore all the time, but adjust to what's there. But yeah, that all these things about, oh, if you do that, yeah, then why the hell are we working? We just throw all of our clients into the market. If January was good, we'd throw all of our clients into the market and take the rest of the year off at that point.
Consistent contributions up or down.
Yep, absolutely. So that's the things that work. Are the boring things, or the things that work. The ones that try and predict and prognosticate what's going to happen is not necessarily going to work in the long run. So we've had a hell of an earnings month so far. Some big earnings that I looked at, big earnings wins, UAL and American Airlines. The airlines are just knocking the cover off the ball if they're run. Now, there's a bunch of trash that's out there, the Spirit Airlines of the world and some of those.
But it's not necessarily reflected in the stock price.
Yeah, they've got earnings were up 5% and 5 to 10% in both American and United, and they're really not there. I don't know, and I'd love your take on this. I don't know if there is that effect, the Boeing effect with the Max, with the Max planes, of them predicting, okay, these things are going to be out of service for a period of time or something.
I will say this, it's tough to comment on Boeing, but regarding the airlines, a couple of things there. Number one, people just are traveling more so now than even they were prior to COVID.
I think so.
But also, one of the reasons why I don't invest in the airlines, I will watch it to see traffic flow, is it's pegged to oil, and oil is down. So if oil is down, and that's one of their biggest input costs other than labor, they're going to make more money.
Yeah, absolutely. And once again, and they really haven't had a big contract negotiation strike in a while in the airlines anywhere. They blew through that a little bit last year and got through it and moved on at that point. So there's really no major negotiations from at least the input cost of that. And oil is down. It's interesting. I just don't see people slowing up on the travel. Once again, we keep saying this every week. Credit card bills are through the roof, everything else, but somehow people keep finding the money, or at least a subset of the world is finding the money to continue to travel.
Yeah.
Procter and Gamble was up, doing extraordinarily well in its space. We had big earnings from Amazon and Meta last night, largely a lot of advertising. I noticed when I dug through it a little bit, a lot of advertising there. Taiwan Semi was up pretty hefty. It's up almost 10% since its earnings. JP Morgan, really a lot of the big banks actually did really well. The regionals are still getting beat up pretty bad.
And one of them almost shut down in New York.
Yeah. And the funny part is they're the one that gobbled up most of the assets from Signature Bank. What a surprise. You had a bunch of crap. you bought a big pile of crap, and it's even worse than I think they expected.
That's what happens when the government backstops something to prevent a crisis, but then you're just pushing the garbage onto somebody else and letting them deal with it. We saw this 15 years ago. We're seeing it again.
Yeah. And like I said, I'm just looking at it. Once again, you just keep seeing the bigger banks getting bigger and the regional banks struggling a little bit. Now, there are some players in there. I think my bank that I bank with, it's interesting because they were actually an acquirer of Silicon Valley Bank, and they actually put themselves in a really good position as a result of it, because it gave them a bigger footprint out in California and with those kind of mid-market companies that are out there.
They probably got some government concessions.
I'm sure. Last one on here was Royal Caribbean. Once again, that same thing. The cruise industry was basically on flatline for 3 years or 2 years. And now they're really coming back major. Royal Caribbean, certainly, I would say the top of that group. You've got Carnival that's in there. You've got a couple of the other ones, but Royals really, they seem to be hitting on all cylinders. They've got a couple big ships coming out that are literally like a floating city.
Do you see some of these things? First of all, I don't know how they float. Second of all, a big wave, how do they stay? They're going up. They got to go out too. But I don't even know how some of these things are even like floating.
It's amazing to me. I've watched. It's interesting though. The challenge though, they keep making them bigger and bigger and bigger. And I've watched some of these because we watched this one show on I think it's Smithsonian or something like that, where it has all these cruise ships on there. And the captains are always talking about, man, they go into some of these ports where there's a lot of wind and they're trying to thread a needle to get this ginormous ship in. And they're dealing with that cross breeze coming in. And it's thank God they've got the bow thrusters and everything that they get themselves in. But literally, we watched this one where they had such a high wind hitting the side of the ship. They were literally right next to the dock and they couldn't make that extra little bit of difference to get into the dock because there was so much back pressure from the ship against the dock, and then the wind was hitting them. And I mean, they took them like an extra hour to go maybe 10 feet in towards the.
I don't know. I was on one a long time ago. At the time, it was Royal Caribbean's biggest ship, and we ran into a storm. Let me tell you, a lot of people got seasick and whatever. It doesn't matter how big it is, you're going to feel it. And like I said, with the way some of them are today, you're right, they're floating ships. But unless it's calm seas, I can't imagine how they're not getting thrown around. But that's a story for another time.
We did the one cruise I've ever been on. We were on a Royal Caribbean, and our cruise or our whatever travel agent helped get us onto the back end of the boat, on the bow of the boat. And so we're at the end of the fulcrum of that thing going back and forth. And both of us were sick as a dog. And of course, our captain gets on. He's from Norway. And he's like, we are going into a tropical wave at this point. And I'm like, a tropical wave. Okay, so that's cruise industry speak for I'm going to be puking all day.
You got to understand the nomenclature, my man.
That's it. It's a tropical wave. All right, not everything was good. So let's take a look at some of the big losers. Apple last night, I don't really consider it a loser. The earnings were okay.
They're just not growing as much.
Yeah, it's just not growing as much. But of course, Tim Cook hinted at something coming from an AI perspective. It's interesting to see that Apple has just absolutely done nothing with AI.
But have they done nothing, or they're just not talking about what they've been doing?
Yeah, or they're not putting out tools on their stuff with AI. I would argue
Siri?
the point.
See, this is my frustration. Isn't Siri some form of AI?
That absolutely. I was just going to say that.
And how long has that been around? 10 years, 12 years?
Yeah, it was basically the advent of the iPhone, which is about 12 years ago, that they embedded Siri into it. And okay, they've been doing AI before everybody else came up behind them. They don't have any new little AI tools or anything like that. So of course, the stock's kind of gotten whipped around a little bit this morning. 3M, General Electric, not great, and even worse projections going forward.
Manufacturing.
The only thing I saw with General Electric is it looks to be that they're going to shed off another. I think they're down to 3 major units, and I think they're going to shed another one off and really get down to the basics of what they do.
They're just unwinding Jack Welch's empire from 25 years ago.
That's exactly right. And honestly, that's probably a good thing because they've managed it horribly at that point. Charles Schwab, interesting. Schwab's kind of a weird animal. I've worked for them, and it's an oddball animal, but they were down both revenue and earnings and revenues across the board. So they just weren't good. And interestingly enough, it may be the acquisition of TD would be my take in there, that it took them a long time to merge them in, which is actually a good thing because usually Schwab kind of merges stuff in and baling wire and duct tapes it together. And this time they actually put some thought into it. And I think probably the biggie of this whole thing was Tesla. It just got hammered again at this point.
And look, they're rolling out cars more than ever, but they're getting squeezed on margins, and competition's going up.
Yep. And the problem is now you've got competition going up unless people even want them at this point. I think people buy the Teslas because of the cool factor. Most of the electric cars that the big 3 are putting out ain't cool factor. I'm sorry. A 4-door crossover
And
is
Volt.
not a Mustang. I'm sorry. I don't care what you say. It ain't a Mustang.
Yeah, but the other reason too that I think a little Scott is gas has come down. If gas was 95 instead of 70, 75, Tesla would be getting more headlines.
Sure. And they've gotten some really bad headlines with, of course, the ice storms and everything else, and people not getting their cars charged and all that. It just all hurts. I think it doesn't necessarily hurt Tesla per se, but I think it just continues to hurt the electric car industry that, you know what, we don't have the infrastructure for it yet. We just don't have it. And a lot of the batteries are just not good in extreme weather, especially extreme cold. They are not good in extreme cold because you have to run your heater. And when you run your, that I love the excuse there, the car companies just don't run your heater. Okay, it's like negative 20 degrees outside. I'm going to run my freaking heater.
Yes. No, they're great cars. And look, someday we'll figure out how to look right. I think they're up to 300 miles per charge now, which is basically right there with internal combustion engine. But eventually they're going to be 350 and 400, and the gas powered car just is not going to get there.
Yeah. I personally think the reality of this is the hybrid step is a much better step going through the process. If I were buying another vehicle, I'd probably buy a hybrid because it makes sense. If I'm on a long trip, I'm not going to go for 3 hours and then stop and charge my car for an hour. I want to keep going, and that's the impracticality. If you drive short distances, I think an electric car is amazing. If I would buy one, but I'm a gearhead, man, so I'm just not going to give up my Camaro for a goofy electric car at this point. But I drive 4 miles back and forth to work, so I could literally drive for a half a month on college. Say what?
You should be riding your bike.
No, I won't. I'm sorry. I live in Texas, like you living in Arizona and riding your bike. And you could ride it in the morning because it's nice and cool, but the afternoon it would be a little toasty riding back in a suit.
In the summertime, 100%. Yeah, absolutely.
What else have you got for us on earnings season? Anything that from your perspective?
I thought it was interesting. I don't have the slide on it, but they were talking about how the top 7 stocks are making up for either 90 or 95% of the overall S&P's earning growth.
Yeah.
Which is just astounding if you think about it. Meanwhile, the market still continues to hold and go up and go from there. I know in our next podcast, we'll get into some of the Fed futures and talking about future rate cuts, which will be a spirited conversation. But overall, look, I think after this week and next week, we'll get over the hump of the major companies and their reporting. And overall, it's been very mixed. And I would say more towards flat to negative if you're looking at the aggregate numbers. They are looking at some earnings growth in the first couple of quarters and negative growth in the fourth quarter. I don't know how they're projecting all that unless they're anticipating economic slowdown, which we heard about all through last year. You and I were an echo chamber there and very dogmatic. At some point, the ice has got to break here. But as long as employment stays high, how many times have we said this? The market will levitate. There's no doubt about it. But I still think it's standing on quicksand, at least in the short and medium term to the election. But we'll see. We had to get through January, so we'll see what happens here in the balance of the first quarter.
That's interesting. I was coming back to my office from dropping something off the shredder and just happened to look up at Fox Business, and they were saying, oh, today's employment number is so good that it assures the soft landing at this point. And I'm thinking to myself, okay, so it assures the soft landing, but that doesn't mean that interest rates are going to come down.
If it was such a good number, and looking at a soft landing, the futures almost were off 80 or 90% from the pre-market.
Yeah.
What is that telling you? So now we're selling on good news again. I mean,
there we go. Yeah, I thought it was sell on the news, or sell on the news.
Buy on the rumor, sell on the news, or buy on good news, sell on bad news. Who the hell knows?
Just buy or sell. I'm not sure. Cool. So our next episode that we've got coming up, it's going to be a lot of fun. We're going to be focusing on really that leading into that thought of some of the predictions on the interest rate sides of things, and our much anticipated episode talking a little bit about trading strategies and discussing what a trailing stop order is, something that I know Ron and I both use with our clients, and something that if you're sitting there and you're looking at, okay, how do I protect it? The market keeps going up. I know it can go the other way, and how do I protect that a little bit?
Maximize those profits.
Maximize as much as you can, and we'll have a good discussion on that on the next show. So we'll see you guys back here for next week. Make sure that you have hit that subscribe button. Make sure that you give us an upvote, and we love comments. I've had some fun discussions with folks on YouTube with questions that they had and everything else. So make sure that you give us a comment. We'd love to have a little conversation there. So thanks a lot, and we'll see you guys back here the very next time.